Good morning, everyone, and welcome to the European crossover webinar. And we've gotten past Halloween, and it's the first day of November, and today's NFP day. So we'll see what happens. We do see the dollar on the back foot here, still pressing a bit lower, which we've been talking about that 97.89 and the significance of that, losing it, and that the dollar index would still remain a sell unless unless we got a weekly close, and even then it wouldn't turn it bullish. It would just simply negate the downside. Well, what doesn't appear we're anywhere close to doing anything like that. And the euro itself has also turned around too, and we did quite the turnaround on FOMC day, and also the close was even yesterday. It tested not very hard, but it defended that test and came back. So see where we stand here, and cable continues to go and impress up here against that big huge pivot to 2980, and also dollar yen continues to remain a bit under pressure in light of everything that happened, um, not only post FOMC but also the whole China thing that really got things turned around. Really, I don't want to say give it an excuse, but it certainly got it going, and it did not turn around despite what the S&Ps did. Uh, Once again, the dollar yen simply turned lower, and off it went. So obviously significance also with the weakness in the overall weakness in the dollar to start with. The peso has come back up. Nothing as of any real significance as far as I'm concerned. All we've done is we've come back up here to this pivot. And once again, like I said, I think I addressed this on the daily roundup. Um, this market has spent 2 weeks down here. So there's nothing bullish here. I just see that it's just a little bit of short covering. That's all. So anybody who's been trying to play on the long side, they've been so frustrated, and finally, those who've been playing it on the short side or have been short from here, they're like, okay, it won't go any further. I guess I'll cover. So we move higher. We haven't even got past 1923.6. So there's nothing bullish. All you've seen is just some short covering, nothing more than that. Now we take a look here. Gold continues to remain pretty well bid here. We actually got up there. We talked about that in the chat room in that the D's futures could potentially make it up to 15, 16.50. We had taken a short around, was it 15.12ish? And we did dip, but I said on a 2 hour, and we're looking at the spot here, but on a 2 hour, if it held above 1509, that would, on the 2 hour close, that would open the door for us to challenge 15, 16.50. And it turns out on the D's futures, the high was 15, 16.60. We did dip back, but we're still holding pretty well. And like I said, obviously this has a lot to do with the strength and not strength, but the weakness in the dollar. Crude oils continue to turn lower here. We did make a dip, or not dip, but a move up here to 54.50 here in the D's contract, but we kind of pulled back a bit here. Now we're D's contracts at 54.26 right now, 54.25. So let's go on and move into the news. It says the dollar is hobbled before the payrolls data as trade war doubts grow. The dollar traded near a 3-week low versus the yen on Friday before a U.S. employment report expected to show a slowdown in job creation, highlighting concerns about the health of the world's largest economy. The U.S. currency also nursed losses against the euro and the pound after Bloomberg reported that Chinese officials have doubts about reaching a comprehensive long-term solution to the U.S.-Sino trade war. The U.S. Federal Reserve cut interest rates this week for the third time this year, and indicated that further monetary easing is unlikely, citing several pockets of strength in the U.S. economy. However, the Fed's hawkish tone has failed to put a floor under the dollar and the U.S. Treasury yields, which suggests some investors do not share the central bank's confidence in the economic outlook due to the risk posted by the trade war. The Fed is expected to hold in December, but the markets are trying to price in a rate cut this year because people doubt that the talks to end the trade war will go smoothly, said Junichi Ishikawa. If the jobs data prints to the weak side, that would put even more pressure on the dollar. The dollar stood at 108 yen after Friday after hitting a 3-week low of 107.89 in Asian trading. Renewed doubts about efforts to resolve the U.S.-China trade war was rattled the greenback and pushed global stock markets lower on Thursday. The U.S. currency is on course for a 0.6% decline against yen. President Trump said on Thursday the U.S. and China would announce a new site where he and Xi Jinping will sign a phase 1 trade deal after the Chile canceled a planned summit for mid-November. However, Trump's comments on Twitter did little to offset the sparked by a Bloomberg report, which said Chinese officials will not budge on the thorniest issues in trade talks with the U.S. In the offshore market, the yuan traded at 7.045 per dollar, set for a 5th straight week of gains. Washington said Beijing had been locked in fiercely. I guess they misprinted that or something like that. It should have been locked in fierce, whatever. A trade war, near 16-month-long trade war that has slowed global trade and raised the risk of recession. The U.S. economy's forecast to create 89,000 jobs in October, slower than 136 the previous month, according to the Reuters poll. Australian New Zealand dollars hug hefty weekly gains despite trade jitters. The Australian New Zealand dollars were holding hefty weekly gains on Friday as an upbeat report on Chinese manufacturing helped offset jitters on Sino-US trade wars. A private business survey on Friday showed Chinese factory activity unexpectedly expanded at the fastest pace in well over 2 years in October as new orders exports rose and plants ramped up. The Aussie edge backed up to 69.05, though that was short of Thursday's 3-month top at 69.29. The Kiwi firmed to 64.32, away from its recent trough of 63.35. Both had dipped overnight when Bloomberg reported Chinese officials have doubts about whether it's possible to reach a comprehensive trade deal. Trump, however, said about signing later on with the trade phase 1. Uncertainty was enough to see that the market is in a slightly greater chance of a future rate cut by the RBA, though a move on the November policy meeting is considered highly unlikely. So let's go and take a look also at the data for this morning. So we don't have anything until we get into non-farm payroll. And they're looking for 89,000. The prior was 136. Looking for a drop of 50,000 in manufacturing payrolls. Unemployment rate is supposed to be at 3.6, so go up a little bit. Average hourly earnings 0.3%. This doesn't have as great an impact as it had recently, and I don't see where we're going to get a big jump on that. If we saw 0.4, then certainly would dent the chances of a further rate cut. Let's see here. And an hour later at 9:30 Eastern, we'll have market manufacturing PMI for Canada. Let's see here. 10 a.m. Eastern, we do have ISM manufacturing PMI. So potential for that market to continue to move even at right here coming in with the ISM data at 10 a.m. Eastern. So with that, we'll move into the data, or to the analysis, I should say. So it says the euro defended the pullback on Thursday, managing to close above the prior day's resistance. See right here. Resistance is going to be 12.13 on NFP day with support at 11.13. So we're once again to factor in potential volatility. Obviously, when you would think to see that with non-farm payroll. Now, it doesn't mean we won't have resistance before, but so we're looking up here as high as 12.13. Doesn't mean we won't stop around 11.94 and pause, but if we reassert ourselves, this is the upper area. We're looking at 12.13. On the downside, we're looking at 11.13. You can see that here. So get a surprise. Doesn't mean we can't go a little bit lower, but this will be a key for it to hold here, 11.13. Same thing on the upside. We could maybe go up to 12.01 and dip back a little bit, but it's 12.13 where you'll see people going to lay off some of the long positions. I don't think they should be going short at that area, but they'd be looking to lay off. Let's go move into cable. Well, you can see here we are continuing to press against this 29.80. And if you think about the overall weakness we've seen here with the dollar, boy, this thing really has an opportunity to go and move much higher here. We'll go with 30.50 right now. You can see it right here, but this thing could really start to scoot up. And then on the downside, put on here, cable continues to firm toward the end of the week, testing resistance at the major pivot of 29.80. Support comes in at 27.43. Wow, that seems like almost too far away now. If you look at it, as this thing continues to move higher. Um, let's go and take a look at it on the 2-hour chart. It's going to come in right there. I'll give it just a little bit room here. $28.60. $28.60. Right there. Okay, and then for the Aussie dollar, Aussie pulled back as China news came into play regarding phase one of the trade deal. Support is 68.59 with resistance at 69.44. You can see it right there. This is going to be more about the dollar index fading back. I mean, true, the Aussie dollar's moved higher, but once again, if you think as long as it's been stuck in the mud, I mean, we have closed at their highest in over a month, but you know, it isn't like as if it's taken off like gangbusters. So it'd just be 69.44. And support, we'll just put it here for 68.52. Let's go move into the Kiwi. Kiwi pushed higher, challenging resistance at 64.36. NFP resistance will be 64.92 and support will be 63.48. So it's going to be 64.92. Actually, we'll call it there 64.93. And support will be 63.48. Let's go move into the double CAD. The dollar CAD retains a bullish bent into NFP day. Resistance is 31.96 with support at 31.36. Well, we're not even that far away from 31.36. But so I may have to adjust it just a little bit, but it'll be 31.96. And on the downside, We'll go with that. 31.24. You can see that coming right across. 31.24. Well, you can see the pace already pulling back after trying to test that pivot. Says the peso moved higher after being stuck in the mud for 2 weeks, closing at the prior failed level at 1923.6. Resistance is 1928 with support at 1913. So as I mentioned, look, the market's been sitting here for 2 weeks. So, all we did is come up to the failed breakout here, or where we failed at the prior breakout. And even then, we're pulling back. You can see here at 1919. So the upside resistance is going to be 1928. We may trigger some stops if we can push above that. And we'll keep the support tight at 1913. Actually, we'll just right there, 1912. Put it to the 1912 handle. But we'd have to get above 1923.6. And all this will do is just generate a little bit extra short covering. For this market even to start to generate, to get some interest, you'd have to get 2 consecutive daily closes above 1937 just to get a little bit of interest. On the dollar yen saw a further fallout post FOMC and BOJ. China News provided the safe haven bid, sending the pair to 108. Further support comes in at 773 with the resistance at 839. Well, this has the potential still to move lower. Obviously, they're just definitely, especially with the dollar weakness and then the safe haven bid here. Let's take a look here on the 2-hour. Well, you can see that 38% comes in at 744. Right there, 770. So we'll go 770. Well, so it's far from what we were saying. It's only 3 extra pips, but we'll go with 770. And you saw that 828, which was a support, that's going to now be resistance, 828. With that, let's go move into the cash dollar index. The dollar index has the potential to move to 96.50, and you can see that here. With prior support at, and I meant support before you get there at 96, 93. Resistance is 97, 97.70 with major 97.89. We've talked about that 97.89. So we're going to actually allow for this to break 97, and we'll go with 96.93. Could even go a little bit lower here. Let's take a look at it on a 4-hour. Really, that'd be already a pretty big drop of 40 ticks, but that probably coincide with the euro testing the 112 area here. Tell you what, we will go with that 96.81 right there. You can see all the touches coming across, so that's where we would find some support here. And the upside be 97.70, which would be a 50 pip move from here. But that'll be our resistance here. Once again, on NFP day, we're looking for stretch levels here. So same thing here with the euro. Doesn't mean we couldn't make it up to 11.94 and then pair back. It's just this is where you'd see people start to lay off some of these positions, 12.13. With that, let's go and move into the cross rates. And you can see the Kiwi yen still trying to advance a little bit higher here. Obviously, today's going to be about the majors. Doesn't mean we can't move on to some of these other pairs, but obviously not to say major moves, but the bulk of the moves are going to be looking at the impact on the majors here. But on the Kiwi yen, we'd had 70.08. That's still going to remain in effect. It's not that we're that far away, but we have gone past BOJ. We're just going to come in right there with all these touches, which is going to be 69. We'll go with that, 69.80. Things are tightened up. We allowed for this because of the BOJ, so it's going to be 69.80. And on the downside, right there, 69.16, 69.16. Let's go move into the euro yen. Well, as the yen continues to have that safe haven bid, certainly there's the option, the ability for this to go in and pull back even further. And I think they will go and test this down here. Well, now the euro in itself should be able to move higher, but once again, when you're looking at this pair, I think we do have the chance to go and break down here, and I think the euro will be stronger, but this this yen will continue to strengthen. So what we're going to do is we're keeping it relatively tight. It's going to be right here, 2011 for today, 2011. I'm not looking for, and not that we couldn't break even lower, but I think the euro will have a bit of a bid here anyway. So it'll be 2011 on the downside. And the upside's going to be right there, 2088. Let's go moving to the euro on. We would look for the on to strengthen, but I think we're going to stay within the confines here. 60.97 and 62.05. $62.06 is fine there. And we are still trading in a tight range, but we starting to break a little bit, but it's still within this range. Let's go and move into the Euro Kiwi. Here we are breaking lower here, and we'd be looking for a move right down here. It's going to be 72.96. With the upside right there, 74.19 and 72.96. And that might even be a bit of a stretch here. Actually, I'm going to move this a little bit lower, right there. So 74.02 and 72.97. Into the Aussie. This is a pretty good little battle between as the Aussie starts to strengthen a bit, but the yen at the same token has been strengthening. It's going to be right there. 74.25 with the upside at 74.81. And let's go move into the guppy. This is a real good test of wills of power in the sense that we know that the sterling has been doing very well, and at the same token, the yen is strengthening. So this is pretty good little test here. We'll actually take a look at it on the daily. We're still not that far away from here. It's going to be 40.96 on the upside. Still ways up here. Boy, this is really a tight one here. May not even want to go that high. It's going to be right there. 40.77. On the downside, we had 39.68. It's going to be right there at 39.29. Call right there, 39.27. And let's go to starting on. It's going to be right there. Right there, 86.98. Boy, they're keeping it fairly tight. 87.96. So we take a look here on the spoofs. They still have the opportunity to move higher. I thought they might even break yesterday, but they held that 30.23 here in the cash. And then they actually, I was mentioned this in the room. They actually took out the lows by 1/4 of a point and then quickly turned around and just came roaring back. I think one of the things you want to look at is let's see how the employment report comes out. Because like I said, they did take that dip and then they came roaring back, which I think it had more to do with a little bit of a stop run. So post the non-farm payroll. Actually, we have some data at 9 a.m. Eastern, or not, I mean 10 a.m. Eastern. Bear with me. Once we get past the last of this, which is going to be ISM manufacturing PMI, keep an eye on these S&Ps. They can end up sliding back. Gold continues the potential for this to move higher. Wouldn't we want to be getting in the way of this as well as we've done it? We did go on a pair back, but we're still holding that bid after the change we saw here in FOMC. I think it has obviously more to do with the dollar weakening. Not that that's always been a big mover. I've said that before. Things really got clipping along when rates fell. And you can see here, keep an eye on this, that manufacturing data, because if it does come in weaker, that really opens the door for the rates, and that will push this higher. So we'll see how that plays itself out. Crude still kind of remains a bit on the weak side, having trouble pushing up. We did back, but still the range has been not very wide at all overall, but still keeping it in check. But I think the equities are going to be a very interesting play. They did pop back, I guess, ahead of the non-farm payroll, but it'll be interesting. Keep an eye on the action post that manufacturing data at 10 a.m. Eastern. That's all we have. Thanks for joining us, and good luck trading on non-farm payroll day.